And welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support podcasts such as Everyday Economics, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Monday, April 3rd, and joining me as always, Dr. Orphe Divounguy, PhD economist. Dr. O, buzzy over the weekend was the story of the BRICS nations, Brazil, Russia, India, China, and what's my S?
South Africa.
South Africa. Thank goodness you're here. And the relationship with the petrodollar and the purchase of oil in U.S. dollars. So this is an issue that I am not completely clear on. I do not completely understand it. You're talking about reserve currency here, right? What has people worked up about this? I mean, alliances where the United States get pushed out, obviously, it raises questions about why. And if you're an American, I think that we either want to be included in things that we should be included in, or we don't want to be included in things that we don't want to be included in. But with regard to petrodollars, I get the feeling that most Americans would like us to be the currency of record, per se, as it pertains to petrodollars.
For sure. So first of all, it just comes down to this. Look, for the longest time, oil was bought in dollars. Since roughly the mid-1970s, foreign oil exporters' reliance on the US dollar as the principal means of exchange and store of value reflected the dollar's already established role as the global reserve currency, which basically continued without serious challenge until recent, right? So it was good to sell oil in dollars because the US, is still, this massive economy with very strong institutions, a large treasury bond market, fairly stable, but not so fast, say the BRICS nations, right? You're starting to see oil being sold in other currencies. The use of the dollar globally has fallen.
And the Russian ruble in the past year, and since the invasion in Ukraine, has strengthened, which has been, I think, probably double galling. I think for most Americans that are paying attention.
The dollar dominance is kind of slowly fading, right? The share of global central banks' official holdings of dollars has slipped in the past 20 years from 72% in 2001 to under 60% today. And the reason for that is, look, if people don't have to buy oil in dollars anymore, they don't need to buy U.S. treasuries. They don't need dollars. And so the demand for dollars falls. It also means the U.S. is slowly losing its ability to finance its debts with people, basically because people bought treasuries, government debt, in exchange for dollars. It also means that the value of the dollar falls. You have more dollars in circulation that people actually want to hold. And the price of imports for U.S. consumers goes up. That's kind of the expected impact here at home.
So should we care, I guess, is the question.
Oh, yeah. We should care. We should care if it means, the dollar loses its value and things get more expensive for U.S. importers. That's what we should care. But yeah, ultimately, this kind of trend towards de-dollarization is ongoing. It's been going for a while, but I think that we're still in a pretty comfortable spot. And the reason why I say that is because the U.S. traditionally, the U.S. treasuries have been kind of a safe haven for international investors, and I've mentioned why, right? The larger size of the U.S. economy, relative strength of this institution, its larger treasury bond market, make it unlikely that the dollar would lose that reserve currency status. It's a safe haven. USTs are safe assets with a high likelihood of repayment that are easy to value and trade. Okay. I think those are the properties that make it so good, that shift to other currencies might actually continue to take a while before we see this complete shift in global power balance that basically China is headed, right? Those are my thoughts on the topic. I think it's nice to track and follow these things. I hear people making a lot of noise on YouTube, all the pundits and stuff, but I don't think it's a big thing to fear. It's just this is what's going to happen. It's going to continue to happen. But if the U.S. can continue to stay sound, then it will do okay. Look, things like the debt ceiling drama in Washington, D.C., do not help us, okay? The U.S. is a safe place to invest because of the high likelihood of repayment, because we don't default on our debts. So issues like, not raising the debt ceiling, the risk of defaulting and all that do not help us. And so if you're concerned about that stuff, then you should be very, very concerned about what Washington, D.C. is doing about the debt limit.
I appreciate your thoughts, and thanks for taking a complex subject like that and making it discernible. And as always, thank you, Dr. O. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics at americastalking.com.